What on earth is going on with MOG coin? The price is crashing. Doesn't make sense to buy this dip. The market as a whole isn't doing too great. So maybe assets that are more depressed than the rest have potential to also recover more than the rest. Now, this is not the first video on MOG coin on this channel. The last one was published 2 weeks ago and it outperformed the average video. In other words, there is a lot of retail interest for MOG coin. That interest didn't help the price though, because at the time the price was at 5039. Now it's at 5020. So pretty much a 50% loss in the span of 2 weeks. While it's true the market as a whole didn't do too well, but Bitcoin only lost 2.6% in the same time span. Now MOG coin is still one of the largest tokens on the Ethereum chain. It's got a liquidity pool of 21 million. And as far as meme coins go, there's only Pepe that's larger, that's still traded directly on chain. And so this is our recent correction, 50%. What kind of corrections did we see in the past? We had a quite ugly August. The price went down by 68%. And if we are about to see the same, we would go all the way down to 5012. There was another similar correction over here. That was in March and April of this year. And that would imply again a potential bottom at 5012. So yes, it's true, MOG coin is down, but it had seen way more severe corrections in the past as well. It's not like this is a historic price decline. Now let's have a look at the on-chain metrics. There are currently 47,000 holders on-chain on Ethereum. On the left side, we see the number of retail investors. On the right side, we see the number of whale investors over time. Now, to be counted for the chart on the left, a wallet needs to hold at least 500 million MOG coins. At the current price, that's roughly $1,000 worth of the token. For the chart in the middle, that's another 10x. So that's now 5 billion tokens or $10,000 worth of the token. On the right side, another 10x, so 50 billion or $100,000 worth of the token. We can see how the number of whales is not really growing, but the number of retail investors over time is going up. This chart starts in July of 2023. And during that time, MOG did appreciate quite nicely. We also see how the number of medium-sized retail wallets tended to grow, but over the course of 2 to 3 months we can go sideways, and we are in similar depressions to what we have seen in the past. The number of whale investors isn't really growing. It seems like since the beginning of October the whales are selling off, but that didn't really hurt the overall price development. So it very much seems like this is a retail driven token. As long as there's enough retail people getting into MOG, the MOG price should long term go up. And the big question is simply, will retail interest recover once more? Is this just a temporary depression, or are we going to see long-term accumulation? Within the meme coin market, MOG coin is actually not that large. It has 800 million market cap. The recently launched Pengu token, so Pudgy Penguins, is already double the size. Bonk is triple the size. Pepe is 9 times the size. So there is still upside if retail continues buying. Now, crypto as a whole is currently expanding very, very quickly. What we've got behind me is the stablecoin market cap. And this is a 3-year chart. So it starts in July 2021. And we peaked in the stablecoin market cap in April of 2022. Over here, what happened was the Terra Luna collapse. So this is when Anchor protocol went bust. This is when UST depegged. The market as a whole shrunk. Money was flowing out of crypto. And this is also where FTX collapsed. And then we saw the turnaround in October of last year. Now money is flowing into crypto again, and that's recently accelerating. The stablecoin market cap going up means, of course, that money is flowing from fiat into crypto, and that of course means that prices across all of the crypto space should continue to rise. I really like this chart because it has very little volatility. We can see the trend very clearly. In the short term though, we might be slightly heated. What we've got over here is again a stablecoin market cap chart, but this time that's not in US dollars. This time it's relative to the entire crypto market. So you might have heard of the Bitcoin dominance chart, right? How much of all of crypto is currently in Bitcoin? That's, by the way, currently at roughly 60%. It tends to peak at around 70%. What we see over here is the stablecoin dominance. So how much of all of crypto is currently in the stablecoins? And there is a strong inverse correlation between this and crypto prices. So when the stablecoin dominance is high, crypto prices are low. And when the stablecoin dominance is low, crypto prices are high. And we seem like, at least temporarily, to hit some potential floor here, which might mean that some cryptocurrencies might see local tops. That being said, especially in the last few days, we do see how the altcoins tend to outperform the rest of crypto. So this is the others dominance. So this is the cryptocurrency market cap that's not in the top 10. And this did go up since beginning of November to today by 23%. It appears as if there is some kind of altcoin rotation happening. At least we see the beginnings of it. And so what was the best performer across all of the altcoins in the last week? It's Virtual Protocol. Virtual is a launchpad of AI agents on the base chain, and it almost tripled in the last week. This is the long-term chart, very impressive. And the big question is, how can we buy something like Virtual when it's not up there, but when it's somewhere down here? My answer to this question is wallet tracking. It's trying to figure out what are other smart investors doing? What are insiders doing? What are people doing that move prices? What are people doing that tended to make the right calls in the past? And so it's always nice to see what is the smart money doing, what is the not so smart money doing. For example, this over here. This is an alert that BitBoy Crypto sold virtual tokens at 1.4 cents. We don't have the alerts where he bought this, so maybe he got some allocation because he's an influencer, but he sold his allocation. He did this multiple times, by the way. And again, what he sold subsequently went up by more than 10,000%. And so yeah, BitBoy Crypto, in my opinion, is pretty much the Jim Cramer of crypto. It doesn't make sense to copy trade him, but it's interesting to see what he's doing. There are other people though that are worth copy trading. For example, over here, we've got Crypto Gains that bought the virtual token. That was at 5.8 cents. So since then, the price went up by 2,500%. Who is Crypto Gains? It's this influencer here. He tends to buy tokens relatively early, and he tends to also be very public about his purchases, which can generate, of course, a lot of attention and can bring in more investors, pushing up the price further. So he does very risky plays regularly. He's got 138,000 subscribers. And so how do we get these buy and sell signals? It's through finding the right wallets first and foremost, right? It's doing some on-chain analytics to figure out those wallets. And it's subsequently by putting those wallets in a wallet tracker and get notifications whenever they buy and sell. So over here, we've got the wallets by Crypto Gains that we are tracking. We've got 55 of his wallets. But then at a later point in time, we also see more people buying into the virtual token, the people that tend to deploy much more capital. For example, over here, we've got Kyle Chessy that bought $100,000 worth of the token, and that was at 48 cents. And so here is Kyle Chessy. He's got 137,000 subscribers. And since he bought, the price went up by 220%. We've got 12 of his wallets, and of course not every trade goes like this, but in general, right, I do believe it makes sense to follow the smart money. It is much better to follow the people that tend to make profit compared to simply just picking random tokens in a list. And so I like this approach that much that I made 8 dedicated tutorial videos just on this wallet tracking topic. They are over here. It's how to find various influencer wallets. It's how to track those influencers, and it's also about how to interpret the signals that we get from the tracking. It's all part of the premium membership of this channel that's down below, thebitcoinstrade.com. It's not just wallet tracking that we do, it's also risk mitigation, portfolio diversification, backtesting. There's more than 100 tutorial videos in total in premium. Once we've got a signal, we of course also have to discuss when should we buy, when should we sell. That's why we've got our dedicated chats for the individual altcoins as well. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I will refund you 100%. There's really zero risk for you. But let's get back to MOG coin. What happened exactly in the last month where we did see a bit of a rally and then subsequently our massive crash? What happened with the adoption of the token during that time? So overall, we are down 28%. We had seen our rally, then our correction. And have a look at the number of new users over time. That peaked on the 6th of December. That was also where the price tended to peak. As attention goes down, as the number of new users levels off, we have seen quite a bit of profit taking. We also see profit taking today. The price is down 7%, while there are way more buyers than sellers. There's 285 buyers on chain versus only 200 sellers. So the sellers tend to sell more per transactions than the buyers buy per transaction. Overall, all wallet cohorts reduced reduced their exposure to MOG in the last month. It appears as if the price rally that we saw on the 6th and 7th of December was mainly used as an exit opportunity by the whales and the medium-sized whales. The small retail investor didn't sell that much, but especially the bigger wallets, they took profit. It's really all about the longer term now. Are we going to see long-term accumulation by small retail again, or is this the final turnaround? I believe in the next weeks we are likely going to have the answer. Until then, of course, there is still some downside potential, unfortunately. Again, because prior corrections were rather in the 60 to 70% range, and so far we are down only by 46%. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers!